Welcome to Talk Tickers, where we break down the latest earnings calls. Today, we're jumping right into Crawford Company's second quarter 2025 results. So the day after their earnings call, bam, that's the market's one-day verdict on Crawford Company's stock. A pretty steep drop, right? So let's dig in and figure out exactly why. All right, so let's get right to it. What drove that big drop? Well, it starts with the headline numbers, and frankly, they missed on both the top and bottom lines. And as you know, that's kind of the 1-2 punch you never want to see on earnings day. So if you look at the numbers, you can see exactly what I'm talking about. The street was looking for 24 cents a share in earnings. Crawford delivered 22, and that's also down from what they did this time last year. Then you look at revenue. Yeah, it grew a little bit, about 3%, which is okay, but it still came in about $8 million shy of what analysts were expecting. Missing on both earnings and revenue? That's the kind of thing that makes traders hit the sell button.
But, those headline numbers, they never really tell the whole story, do they? To really get what's going on, we have to peel back the layers and look at their different business segments. And trust me, this is where the real story is.
Okay, so what we're looking at here is a real mixed bag. It's kind of a tale of two companies. You've got International and Broadspire looking really strong, posting some nice growth. But then, you see that big drop in Platform Solutions? And that right there, that's the piece of the puzzle we need to focus on. It's the key to this whole quarter. So that nearly 10% drop in Platform Solutions revenue, you'd think that's a disaster, right? Well, not so fast. Turns out this was completely intentional. Management came out and said they're actively cutting out the low-profit junk business. And get this, while revenue went down, their operating margin in that segment shot up by over 500 basis points. That's huge. They're literally trading less money for more profit. It's a pretty bold strategic move. And at the same time they're doing this surgical move in Platform Solutions, their other big businesses were absolutely crushing it. I mean, Broadspire hit a record for revenue this quarter. A record! And the international business grew by a really healthy 6.6%. It just goes to show you how their diversified model can really work, right? One part of the business is in the middle of a strategic change, while the others pick up the slack. So, you have the market freaking out about the headline miss, but if you listen to the earnings call, management was telling a completely different story. They were calm, cool, and collected. Their message was basically, don't panic, this is all part of the plan. One of the big issues they talked about was the slowdown in U.S. property claims. It's been a real headwind for them. But the CEO, Roe Hit Verma, was really clear on this point. He said, look, this is not a permanent shift. He believes it's just a temporary thing because insurance costs are so high right now that people just aren't bothering to file smaller claims.
And they didn't just say it's temporary. They actually gave a timeline. They're basically saying, give it 12 to 18 months. They expect the insurance market to cool off, prices to soften, and then, poof, claims volumes should snap right back to normal. It's a big bet that things will eventually go back to the way they were.
And look, talk is cheap, right? But management is putting its money where its mouth is. They actually increased the dividend. They pointed to their rock-solid balance sheet. These are not the moves of a management team that's panicking. It's a signal to the market that they truly believe in the company's long-term health, despite these short-term bumps. So this is what it all boils down to. We've got this classic battle, this tug-of-war between two totally different ways of looking at the exact same numbers. So the big question is, who's right? Is the market right to sell off the stock because of the misses we're seeing today? Or is management right? And should we all be looking past this short-term noise to the more profitable company they're trying to build for the future? It really is that simple. The market story is all about the here and now. Missed earnings, missed revenue, sell. Management story is about the long game, building a stronger, more profitable business. You got two completely different narratives, both centered on the exact same stock.
Okay, so with those two competing stories on the table, what happens next? Where does the stock go from here? Let's get to our final segment, the next call.
All right, so looking ahead, Wall Street is already penciling in a bit of a rebound next quarter. The consensus is for about 29 cents a share. For our part, we think the stock is probably going to be stuck in a trading range for a little while. Why? Because investors are going to be in wait-and-see mode. They want proof. And what's that proof? You're going to want to watch two things like a hawk. First, does that revenue and Platform Solutions stop dropping? And second, do those margins in Broadspire stay strong? That's where the rubber meets the road.
So for our official rating, we're calling this a market perform. Look, the strategic changes they're making, they're smart, and they make a ton of sense for the long term. But you can't ignore the headwinds they're facing right now. So we think the stock will probably just move with the rest of the market until one of those two stories, the market's or management's, proves to be the right one. The question you have to ask yourself is, are you patient enough to wait for that story to play out?
And just a quick reminder, of course, this is not financial advice. It's for informational purposes only. Thanks for tuning in to Talk Tickers.